Today. Thanks so much for joining me for Stocks for Breakfast. My name is Pete Renzulli. Very excited today. We've got a lot to cover. We're actually going to do a deep dive right away into energy stocks, old school energy stocks and new energy stocks. We got a bunch of them popping up this morning in a big way. Some of them setting up that were on fire about a couple of weeks ago, kind of took a 2-week pause. And now the newfangled energy, which I know solar energy was a big thing back in the 70s that never caught on, but now I think we're forced to do it. Now some of them are popping in a big way. Got a lot to talk about today. I also want to remind everybody that we have a webinar tonight. Earnings season is in full swing right now. Excuse me. And if you want to learn how to interpret the earnings reports, we're actually having a webinar tonight with a good friend of mine, David Trainer, who is the CEO of New Construct. So please do me a favor, click that link below the video and make sure you register. Earnings season is amazing right now, and you really want to level up your game. It's a free webinar. All you got to do is make sure you register for that. So we have a bunch of stuff to discuss today, so stick around. I'll be back in just 1 second. Okay, so obviously I want to thank you for being here with me today. Everything we discuss here is for educational purposes. It's up to you to make the final decision. It's my mission to help you make better decisions. So we're actually going to jump right into it. I had somebody post a message last night that we talked about Hood yesterday, but I talked about it a little bit later in the video in the live stream because I started to answer questions from everybody. So I got to kind of hold myself back this morning from answering questions. I want to get right into the topic of the day, which is earnings, some last night, some today. And the two sectors that we're actually going to be paying attention to today, which is, like I said, old school energy that on fire and then paused for a couple of weeks and now starting to line up really well. And then new school energy, I guess we'll call solar energy, some new ones. I want to make sure I give everybody some stocks to trade because that's one of the biggest questions that we get is we went over the sector rotation, but which stocks are actually in there to take a look at today. Now, obviously, we don't give entries and exits here on the call because that's what we do inside the boot camp. Only you can decide if you want to join the boot camp with us. But here's designed to help you understand order flow, help you understand reading the tape, and then you can dive in there and hop on the entries yourself as well. I just want to say hello to a couple of people. Hey, Weldon. Good morning, pal. How's it going? John Bates. Always a pleasure, my friend. Winnie. Good morning, Winnie. How are you? John Weinberg. Catherine, how's it going, Catherine? Let's see. LJ, good morning, pal. How are you? All right, so we're going to get right into it. I got that comment yesterday that I took too long to get to Hood. So we're actually going to head right over to that. We're actually going to jump right in and start hopping on to some ideas. So McDonald's actually reported earnings after, this morning, actually, up almost 3.4%, up $8. So you can see where it closed yesterday, and now it's all the way up there. That's a pretty big opening for McDonald's. So we're going to keep an eye on that. One big thing that we discussed yesterday that's really important is to make sure that you understand just 1 day of buying. Matter of fact, not even a day of buying right now. It's pre-market is not enough to offset that prior 4 weeks of selling. So we need to make sure that we have that line in the sand, that one price that matters, which is going to be today's opening price. So we're going to take a quick look at the McDonald's numbers. Then we're going to take a look at the ENPH numbers, which just absolutely blew the cover off the ball yesterday. I can't even get it out. Let's see. So McDonald's top estimates, third quarter earnings and revenue. All right, fast food chain. So same sales growth in its international markets accelerate as COVID restrictions ease. I think we're going to start to see a lot of that right now. And one of the companies that we should keep an eye on that's going to actually have a very similar reaction to COVID restrictions being lifted is Starbucks. If you remember, we actually talked about Starbucks, I want to say about 2 weeks ago when it got two different upgrades to 127. Not a monster number. That's only about $13 higher from now. But look, I mean, a slow $13 is still $13, right? So you got to start to think about that. We actually had a conversation yesterday in reference to starting to read the headlines differently. Now, a lot of people, there's two different ways of understanding how to find stocks to trade. There's you reading the headlines, you're interpreting those headlines, then you go in there and kind of like we're doing right now with earnings, which is then you look to see follow through. The other way is just to run scans and know those sectors. So have scans for sectors, for industry groups, and then run scans on those stocks to see which ones match the criteria. Which actually is a big point that I want to get to right now, because we actually had somebody watch a video that I did about 7 months ago on on actually doing scans. And the guy went out of his way to post in a comment on YouTube that he looked up one of the stocks that I mentioned during the scan and it went down the next day. 7 months ago. Like, come on, dude, get a life. Anyway, I want to talk about that. There's a difference between finding ideas that meet criteria. So you have your edge, and then you go find stocks that meet that edge. But this is the difference. This is why we talk about the three pillars. There's stacking the order flow, reading tape, and risk reversal. The second one, which is tape reading, is a requirement after you find ideas. So we're going to show some ideas today. We're going to talk about some ideas that are valid now. But you have your edge, right? And then you do your scans to find stocks that match the edge. But then you have to go a step further and say, are these trades right now? And I'll give you a perfect example. We were actually watching this stock for a while, Net, and you could see it exploded, right? And obviously it was coming up in scans. And after a while, it gets to the point where, yes, it's still a valid idea, but is it a valid swing trade after going up 10 days in a row? So I want to challenge you right now to just take that next step where I'm sure you have an edge. I'm sure you have an idea of why you're looking at certain stocks. Then the next step after that is you make a big list of stocks that match that edge. Then you go the next step, which is which of these makes sense right now from a risk reward perspective. Please write that down. It is such a big part of trading. And probably the biggest mistake that I see when new members come into the boot camp is they chase price action. I went to the biggest list of the list of stocks that were up the most yesterday, and I'm going to trade those stocks. Well, you can't. You have to put them in perspective first. Did it go up a lot yesterday, but it's stuck in the middle of a trading range? Did it go up a lot yesterday, and it's the first day it's rallying? Did it go up a lot yesterday, and it's already been up 12 days in a row, and you're going to have a negative risk reward to initiate a new swing trade? So the first is stacking the order flow, building unbelievably good ideas, picking stocks that have a really high probability of moving in the direction you anticipate. But then the second part is now a good time to buy those stocks? So I got a chuckle at it what the guy posted because of a video that I did all the way back then, but I thought it was kind of cool to translate that into a trading lesson right now. And you know what, Myers, is actually this is actually a really good point. This is actually a really good point because you have to listen to the whole thing. You can't pick like one sentence out of what somebody says and like think that's the entire book. So that's a really good point, Myers. A really, really good point. Let's see. John said Coke actually beat as well. So Coke is up $1.50, almost 3%. So you can go to McDonald's and get a Coke today because both of those earnings are up today. So we're good on fast food today. So anyway, I want to get right into what we talked about, which is energy stocks. We're going to start out with some old school energy stocks, and then we're going to make our way into some solar stocks because, as you can see here, ENPH just blew away what was expected. And remember, we keep talking every day about interpreting these earnings that you need to know what was expected to know when the number comes out, how to put that in context. So remember, if you haven't done it already, please click the link below the video and register for the webinar that we're having tonight because it's going to discuss all of this, core earnings, earnings distortions, and how to come up with the real number so that you could look at earnings with conviction. Click the link below the video. It's a free training at 6 p.m. Eastern tonight. Even if you can't attend, make sure you register so we can send you that webinar, all right? So anyway, I want to get into, we're going to go straight into the charts, okay? First, actually, in the market itself right now, we are only down, last time I looked, it was basically break even. We're down by 1 point in the futures, which after the way the market's traded the last couple of days, after some of the selling that we had yesterday, just absolutely amazing, the fact that we're not selling off again. You had what many people might have called a topping tail yesterday, not quite a bearish U-turn in the way that we look at it, but it was a reversal. And, it's funny, keeping things in context, we made all-time highs again yesterday, but the market was going down for an hour, and some new day traders that came into the boot camp, they're like, oh, my God, everything's falling apart. I'm like, falling apart? We just made all-time highs 20 minutes ago. Keep the big picture in context. And the market just had a vicious, vicious rally for 2 weeks. Amazing. Microsoft, new all-time highs yesterday. Keep the big picture in context. I worked out this morning. Can you tell that I'm all pumped up right now? Oh, my God. Anyway, let's get into some of the ideas. The big thing I want to keep in mind there is Keep everything in context. If you're a day trader and the market's selling off for an hour, but like 15 minutes ago, we just hit new all-time highs, go pour a cup of coffee and wait for the market to bottom out to find another spot. You don't have to be involved every single minute. That's a big part of what we do. And quite honestly, something that a lot of people really like about what we do in the boot camp is we're not trading. We're trading when there's something to do. So if I can give you any advice, when I first started trading, we would trade 100, 200 trades per day. It was exhausting. We would do it on the 1 minute chart and we would go back and forth all day. And every time there was a blip up and a blip down and level 2 looked a certain way, we were trading all of this. It's absolutely exhausting. I don't do that. We actually, it's actually interesting. We have one of our bootcamp members here right now, Beat. Let me see if I could find him in here. Beat Junga. Okay, he's been in our bootcamp twice. And he actually sent an email out the other day that he's been making 30 trades a day. That's a lot of trading. That's a lot of trading in the market right now. And it's very hard. That kind of means that you're in, you're out, you're in, you're out. The next level is getting to the point where you are understanding expectation for profit, which is the whole reason we put on risk in the first place, the whole reason we choose to accept risk. So the challenge that we're going to have, that we're going to work with, is essentially some trades you need to hold a little bit longer because they're better opportunities. And, there's 2 times that you need to pay attention to: timing to get into the trade, but then time in the trade. So if you did the game plan, you did all the hard work, you found a great idea, you put on that idea, you timed it perfectly. Now give the market some time to make you money. So if you're in and out, like I described there, which obviously I was joking around a little bit, but that actually is how much we used to trade, which was a lot. We trade millions of shares a day. I'm talking about in 2000. This is a long time ago. When you develop a little bit more maturity in your trading plan, you understand that it's actually easier to maybe have 5 ideas, play those 5 ideas, and give those trades some time to give you money. We're going to go back and forth on that a little bit, but just like a lot of people ask about the day trading aspect of it, we are not hyperactive day traders. Matter of fact, if there's nothing to do, I spend a lot of time when I'm on the broadcast in the morning and I'm doing the broadcast, I spend a lot of time telling people there's nothing to do, dial it back. We actually had something unfold in the market yesterday. You see my sleeves are up. I worked out today. I'm busting out of my shirt. We actually spent a lot of time yesterday talking about the market internals not doing what they were supposed to do. I'm going to finish today's video up showing you what happened in the market yesterday because it was absolutely amazing from a day trading perspective. I recorded a video on it last night. I was jumping out of my seat. Stick around. I'm going to show you that at the end of the video. All right. The one thing I do want to say, I want to remind you this because it's very important. Click the link below and register for tonight's webinar. We're going to cover earnings, the real earnings, how to interpret the earnings. There's so much opportunity when earnings season hits. You just need to understand what the real numbers are. So we're going to segue right now over into the solar stocks. Okay. All right. So a lot of the stocks that we've been talking about here, which is ENPH. ENPH beat estimates. Now, remember what we talk about every day, which is the expectation. This right here. Okay, this part right here, we've been looking at a lot of earnings that have been coming out, and we've been saying what is expected. And if you remember, we talked about IBM. IBM earnings came out, and they beat, but what they beat with was what was expected. So there was no upside surprise, no downside surprise. It was like, okay, not a big deal. And then IBM got crushed after earnings. So we could take a look at that right now. I want to keep inspiring you to kind of take notes because this is really important. So IBM came out. They did what they were supposed to do. Nothing was earth-shattering because remember, we're buying tomorrow's cash flows. We're not buying what they did. We're buying tomorrow's cash flow. Remember, we've spoken a little bit about discounted cash flow analysis, and we are buying the earnings going forward. Okay, so IBM going forward is like, ENPH was different. ENPH came out, and they surprised with an upside of 27%. That's a big deal. So that means that now we're expecting more And that's why the stock is heading up the way it's heading up. So what we want to do now is we want to look at ENPH and a bunch of other stocks in that industry group. Remember, there's the bigger sector, and then there's the industry group within that sector. So in this case right now, we're going to talk about the solar stocks within a bigger sector. So remember the stock market power pyramid. There's the market, the sectors, then on top of the sectors are industry groups, and then individual stocks. So right now, we're actually going to take a look at the industry group for solar stocks to give you some ideas, okay? So if we head on over to that, obviously ENPH is one of the stocks that is now 199. So this stock is trading, that's where it closed, and right now it's trading all the way up there. So you can see it's actually up 14.72%, almost 15%. So that's one of the stocks in that area. Get a lot of questions. Oh, $200 is too expensive for me, right? All right, so SOL is $6. This is a stock that we traded quite a bit last year, so you can kind of see the price action when the stock starts to come off the mat and the group is strong. We actually had some pretty good trades in this stock last year, so don't discount. I normally don't trade penny stocks, but we do get a ton of questions, and I just want to clear that up for a second. I personally don't trade penny stocks, but we do have a lot of members in our community who are trading and on top of some of these stocks that are, kind of between $8 and $10 are starting to perk up a little bit. They called them out to the community. We put them into a whole separate category, stocks with a catalyst. And then if they start to, like this stock, perk up a little bit and become interesting. But this one's interesting because it's in the right industry group that we're paying attention to right now. So we'll get a lot of questions about penny stocks. So SOL is in that criteria. CSIQ, these are all stocks in the solar group. So we're looking at more stocks besides ENPH as a sympathy trade with the really good earnings off of ENPH. So CSIQ, another one that is very common, I should say very popular in our community, which is Run. And you can see how hard we've been waiting for Run to break this downtrend for a while. And now, remember what we keep talking about every day, a push and a pause, a push and reversal yesterday, but getting a big bounce here, right? So Run is another one. FSLR is another one. And let's zoom this one out a little bit. You can see this one's actually resting right at resistance, but now it's not. It's actually punching through at 113.46. And something I want to get across here, which is super ninja, okay? It is super ninja. When you are building your list, and this is something that is not talked about a lot, which is really, really important, okay? Let's say you're building your list and you want to trade energy stocks or whatever it happens to be. And the biggest question we get is, how do I make more on my winners? How do I understand when I should be holding my winning trades longer? You want to write this down, watch it again, what I'm about to tell you, okay? We're covering a whole bunch of energy stocks right now, right? They're all up pre-market. They're all trading really well. Could be the energy stocks. It could be the electric vehicle stocks. It doesn't make a difference. Here's the thing, though. You need to go and make a list of all of the stocks that are in that individual industry group. They need to meet volume criteria, average true range criteria, just as an example. So we did this yesterday in solar electric vehicle stocks, came up with a list of about 8 of them. You need to take those 8 stocks, put them in a watch list in your software. Sometimes there's going to be 1 or 2 of those stocks that are going to be in play. But, and here's the big thing, and this is when you understand how and when to make more money. There's going to be a moment in time. It could be a day. It could be an hour, which a lot of the energy stocks do that, quite frankly. They open up every day strong, have been recently. There's going to be a moment in time where you're going to be like trading. You'll be like, all right, working the keyboard. And you're going to look over and you'll be like, wow, all 8 electric vehicle stocks are positive from yesterday's close, positive from today's open, and positive the last 5 days. They're all green. You owe it to yourself to get in there and pay attention, because that's where smart money has attention in that entire industry group. So I'm going to challenge you right now. You need to start going a little bit deeper. And you know what? I'm actually going to show you how to do that right now, because it's actually kind of cool. A lot of people don't really go this deep, but I want to do this for you right now in a way. So let's actually say we're going to type in Tesla, just as an example, right? We're going to type in Tesla, and you can see over here, maybe you can't see, let me just zoom that out a little bit. The bigger sector is consumer cyclical, but then you have auto manufacturers. So this is the sector, this is the industry group. Hold on, I got to boot somebody out of the room. We don't allow cursing in here. So anyway, you can see now that there's 30 stocks in this group, right? Consumer cyclical and auto manufacturers, but that's not enough. We need to break that down to the stocks that are in play that have smart money attention, right? So now we go down and we know we want a minimum for this conversation, a minimum of average true range of $1. So you see that brought that down to 11. And we want a minimum of 1 million shares traded per day. And that's the 8 that we just came up with. So you can see GM, Lucid, LI, NEO, Tesla. So those 8 stocks need to be in a watch list as an industry group by yourself. So does everybody understand that? I'll actually leave that on the screen. Does everybody understand that? That's how you get to the point where when that whole sector is lighting up, and you have to do this work. And I say it every day, and I mean this from the bottom of my heart. The hardest part of trading is before the trade, which is being prepared, having an edge, understanding your risk management. After the market opens, then we're just, I'm on the mic all day, I'm talking all morning, and we're just talking about trading. We're not talking about what are we looking at. We're talking about the list of stocks that we made prior to the market open, and then we're just sitting back looking for entries. That's trading at the highest level, but it means you need to be prepared first with this kind of a list. So if you're not making more on good days, it just means that you got to go that one step further. Pour a cup of coffee at 4 o'clock in the afternoon after the market closes. Do it 9 o'clock in the morning before your family wakes up on Saturday. Go in and build a couple of these lists, put them into your trading account, and then watch. It's going to be so obvious when that industry group is cranking. You owe it to yourself to make more money when that's happening. This is not complicated, but after 21 years of doing this, you start to put the pieces together where it becomes structured. You want to be able to head into the market every day where you expect to make money. Will you make money every day? No, of course not. But if there's money to be made, you better go and get it when it's sitting there in the corner and you go pick it up. It's when you're not prepared, that's when you should be angry with yourself. So these little things that we're talking about right now, which is also why we're talking about the solar stocks right now, are a big part of it. So we're going to get back into some of the more solar stock ideas that we're going to be keeping. So FSLR matches that criteria. Let me actually zoom that out. I think I made that too big there. So FSLR as well, SPWR as well. And again, you can see this one actually is hitting resistance, but now it's actually up $1, so it's through that level. Nova is another one. Hey, you can see it pushing a pause, resting right there. JKS, again, I can't stress this enough. Okay, this stock was probably, for me personally, the stock of last year. And that's why we're putting so much attention on this. If you were not trading this, if you weren't in our community last year, this is the power of when a sector lights up. And if this stock doesn't get you all excited just from what I'm about to show you and understanding the power of putting those industry groups together. All right, you ready? Okay. This last year, at this moment, that's the power of when an industry group is in play across the board, like we're showing you right now. You owe it to yourself to get in there and print money when it's obvious. That is just from last year. And that has nothing to do with the pandemic boom. That was the sector was in play. So, every day we spend our time looking at this, right? Every single day. It's the first thing that I introduce to the community every single day after the market closes, because I want our community to go in there and start paying attention right away. Which sectors right now, and then which industry groups in those sectors should I be focusing on, because the smart money is paying attention to them. Then the next step is just reading the tape to understand how long it's been. So you see how we're putting the pieces together? One of the biggest objections that we get, or roadblocks is probably the best way to word it. One of the biggest roadblocks is when somebody new comes into the boot camp, they're overwhelmed. They feel like there's just way too much going on. Working it down in this format is you're no longer guessing, you're looking. You're looking for where smart money has attention. I mean, isn't it just smart that we put our attention where their attention is? There's no reason to be bottom fishing a stock that's getting absolutely crushed when the smart money is already buying stocks. We're looking at this list that I give everybody every night, and now okay, which of those stocks are tradable now? This is I'm going to use a really strong word here. This is the easiest way to look at the market because we're not guessing. We eliminate all the overwhelm. We reduce all the friction to find good ideas. The only other step after that is after we pick a side, then we learn how to pick a spot. And then the third party after that is learning how to manage the winners. That's a big deal. All right. So I want to make sure everybody walks through that process. All right. So again, I just want to make it clear again, this is the entire process that, we go into a ton more detail in the boot camp and whatnot, but I want to inspire you with ideas to ask yourself, am I making trading harder than it has to be? If your current situation right now is you feel like trading is, like every day you feel like you're getting hit over the head. There's something missing. There's a gap between that. So I'm hoping that I can inspire you to make your trading a little bit more structured so it becomes a lot more simple and easier for you to have conviction. All right. I'm going to remind you again one more time. If you want to, earnings season's in full bloom right now. We're obviously talking about earnings right now. Click the link below the video. Make sure you register for tonight's earnings webinar. It's going to be a really, really good one. You don't want to miss tonight's webinar. All right. Let's see. I just want a couple of people in here. I just want to make sure I say hello. Jeremy, how's it going? Yep, exactly. Let's see, Jason. Where do you keep your watch list for each sector? Is there an app? Actually, Jason, we don't have an app yet. What I do right now is I give it to everybody in our community at the end of every day. We will be coming out with an app soon. Software development can take a little bit longer than you could ever imagine, at least certainly longer than I've ever imagined. Let's see, Lewis, New York Ranger fan. How do you interpret the order flow stack? We teach that kind of stuff in the boot camp, how to do that. And yep, exactly, Joseph. There's so much noise out there. We need exactly. All right. So the last sector, we promised two sectors we were going to talk about today. We just talked and rattled off a whole bunch of energy stocks in solar. Now we're going to make our way over into what we might call old school energy stocks right now. And we're going to take a look at some of those and stocks that are setting up right now for today as well. So we're going to take a look at, excuse me, SM. Okay, you can see here, there's no reason to bottom pick. We are right back up there in an area that's pretty darn exciting. CHK, CPE, MTDR, EOG. Oh, spelled that wrong. EOG, Devon Energy, MPC, COP. Oh, MPC, I think I typed wrong. MPC. And VLO. Okay, so VLO's got a little bit of resistance at 84, but you get the idea. All right. So I just can't stress strongly enough. I get pretty pumped up when we have these conversations. And I'm often asked, if I'm such a good trader, why am I doing this? And it's kind of a double-edged sword, because I understand why somebody's asking it. But I honestly, I want to be honest. Trading is freaking hard. I don't know if there's any other way to say it. I mean, anybody says trading is like, when you're learning trading and you're trying to cut you kind of cut your teeth, it's hard. I went through all of that when I first started trading. I had notebook after notebook. You can see I got all the books. I got hundreds of books on trading. Trading is hard. And the reason I'm doing this is because I understand how hard trading is, and I'm pretty good at teaching it. And I like to teach it because I love to see the light bulb go off, and even just simple conversations like this on social media where I can help you understand something and maybe think about it in a different way. And then you could come back and be a testimonial and say, you helped me. And that makes me feel good because look, you start to give back and you start to help somebody. It's a kind of an awesome feeling. I have to be honest with you. And that's why I do this. Of course, I have a business as well, which is, you want my 21 years of experience in detail and you want to hang out all day. That's on the other side, but you want to stay here, that's fine. But we do get that question all the time about why am I doing this? And it's because trading's hard. And if I can help somebody get to the other side where they start to believe in themselves, honestly, that feels good. It feels really good. And if you've ever been a mentor for somebody for something, it's actually something that you can be really proud of. And I get more excited about the success in our community than I think anything, because when you take somebody who knew absolutely nothing about the markets and turn them into where they're calling out trades during the day in front of 400 other people, or you take somebody else who knows everything about the markets but can't make a dime, and you help tweak them just a little bit to now where they're seeing their account grow steady and they understand what they're doing. Gotta be honest with you, it's a pretty satisfying feeling. And that's what we have in our community. I mean, I really love the people in our community. We have just the most amazing people in there. And we're growing every day. The boot camp is growing every day. So I just want to say thank you, both here and especially to the people in our community. It's pretty exciting. It's pretty exciting to be involved with a group of people like that who just really care about each other every day. So anyway, to recap it up today, make sure that you're focusing on these energy stocks. We rattled off a really big list of them today. Then we went a little bit deeper into, you might call these old school energy stocks. So there's a lot to do. So just two things. Make sure you register. Go to below the video. Make sure you register for tonight's webinar. If you want to learn more about the boot camp, that's also in the description as well. So if you could please do me a favor, smash that like button. If you got some value out of today, make sure you hit that subscribe button. All right. I actually have to get ready for our boot camp gameplay meeting in a little bit. So have an awesome day, everybody. I want you to know how much I appreciate that you're here with me. So be awesome today and have a great day of trading. Take care now, everybody.